All right. Hello, everybody. Welcome out to the Sunday, November 26th market update BIOS report. Diving right in here, let me share up my screen. Bam. Starting out with economic highlights for this coming week, mostly weighted towards Thursday and Friday. Monday, only real significant thing, new home sales is going to be reported on Tuesday. Consumer confidence will be important at 10 a.m. Wednesday price index will be moderately important, but I'm not going to be really worried about that too much. Thursday and Friday, fairly heavy on the economic data coming out. We have OPEC releasing some notes, core PCE price index, unemployment claims, Chicago PMI, and pending home sales, all five of which are going to be important on Thursday. And then the three of these, ISM manufacturing, PMI, and prices index, are going to be important on Friday. And I think we're kind of through the point of caring too much when Powell speaks, because the market is really pricing in and expecting that we are done with rate cuts rate hikes for the foreseeable future, and might actually start to see rate cuts in 2024. So the most important thing around Friday, 11 a.m. when Chair Powell speaks is going to be related to any signal that he gives of the Fed's plans to either stay in elongated pause or potentially hint at potential rate cuts. If he does hint at any rate cuts, that could be a really, really big fuel to the fire for the market. But other than that, I'm not anticipating anything else that he has to say being much of a market mover. Going out, taking a brief look at our last week's price action. We did have a shortened week for the holiday, so we didn't have trading on Thursday for Thanksgiving, and Friday was a half day. This is set to look at 1 week performance. And the main thing that stands out here to me is NVIDIA. You notice a big drop in NVIDIA, and that was due to a couple of things, mainly a OpenAI company that wasn't publicly traded, so that's important to know, ended up firing their CEO and had a whole kerfuffle with a bunch of employees getting upset and leaving the company. And other companies, especially Microsoft, swept in and hired them, and basically did a talent grab, and has now also released information saying that they are going to be making a chip that can potentially rival NVIDIA's top of the line chip. So that is a pretty big claim. But due to that news, NVIDIA took a pretty significant hit. And if we go out, I actually want to start on NVIDIA's chart just so you can see. They took a decent hit on the news, but they have still been pushing at the very top end of this range and threatening that all-important breakout of around $505. If we toss this out to a weekly chart, it's too early to tell right now if this is going to be kind of a double top up here where we had these big wicks up and touched the 500 mark, and if that is going to hold as resistance and force this back down, potentially all the way down to the 50-period moving average on the weekly, or if NVIDIA is going to be able to hold their ground and reclaim and reline up that breakout. Again, a little bit too early to tell. On earnings, their price really did not move much at all, kind of came in just in line with expectations. So now we are past most of the news headlines on this company, so it'll be really interesting to see if we can hold support and firm that up. I apologize for the alert going off. So anyways, keep an eye on NVIDIA, potential breakout of 505 or potential pullback down into the lower parts of this range again. Just wanted to put that on everyone's radar since there was some important news around that company. Diving into our broad markets, let's get into it. On the daily chart, we are obviously very overextended. In the last, 1 month of trading, the S&P is up about 11%. RSI is showing over bought territory. It is coming back down. Typically, traders do not look at an overbought reading of this as a sell signal. They look at the cross back below the 70 line as a signal. So for example, right here, we had the cross back below the 70 mark. This would have been our sell signal here. So we're not getting a sell signal yet from it, but it is suggesting that we will likely end up having a bit of a pause. and that there might not be a whole lot of gas left in the tank for this current run without a bit of correction, either with longer time correction or price correction. So keep an eye on the markets. I'm going to be hoping and praying to the market gods for a little bit of a pullback here to reset our risk to reward, let these moving averages catch up a bit before I get too excited about the major indexes here, especially as it relates to the S&P. And then also, this is going to be a very similar conversation for the NASDAQ. The NASDAQ, very similar, hasn't crossed over here for the RSI signal yet, and has just been kind of consolidating in a fairly tight range here, digesting this big gain that we've had over the last month. If we toss this out onto a weekly chart, you can see that we did set a new higher pivot low on the MACD here on a weekly time frame. So that is leaning bullish overall. But on the weekly chart, you can see after 4 big candles in a row, each one with decreasing momentum and a smaller and smaller candle, it might make sense for us to pull back here into the moving averages, maybe around 15,500. So about a 450 point drop from where we are, and then trying to reline up a breakout above the highs here around 1686, back up to 16,767 for the all-time high. So that's kind of the thesis that I have right now, is that we are probably in a little bit of a development, taking a little bit of a break off here and letting charts kind of reset themselves going into this week. And hopefully by the end of this week or early next week, we will have some trade setups in these areas. Going out to the Russell 2000, this is just gross, nothing to see, tons of overhead resistance. We've run too far off the low to have any real trade here on the weekly with too much resistance overhead. On the daily, we do have a fairly clean level here setting up for a potential break, but I'm not interested in that one because we have the 200 period moving average above, and also on the weekly chart, like I said, we just have a ton of mess overhead and a ton of resistance overhead. Now, that said, we do have to look at previous price action, and we can notice here that the last few times that the Russell 2000 have gotten below these groupings of moving averages, we have broken through fairly quickly without too much of a fight, and then confirmed on top of those as new support. So it wouldn't shock me if we do that here, but I think there are easier places in the market to make a buck right now than trying to fight on a chart that has a bunch of overhead resistance. So that's kind of my game plan, watching this for development, but probably not taking any trades on it until there's a little bit more development there. If we go out to crude light, crude light's just been getting murdered, and doesn't look like it's going to stop. We did get back above the 9 last week and then just could not hold it, hit our head just below the 20 here and rolled back over. Looks like this is probably moving lower, at least to come down and try to put in a double bottom around 72.40. And if that breaks, going out to the weekly chart, coming down to about 70.25, or 70.15 would be the 200 period moving average that we have seen test and hold as support multiple times this year. So it makes sense that that would be a place where buyers will step back in. So unless we get any wild news on crude light, I'm kind of anticipating a retest of this 200 period moving average before I'm going to get interested in any plays there. We go out to Bitcoin. Bitcoin just doing what Bitcoin does, had a huge pop, and now we've just been kind of consolidating in a big, choppy, messy range for the last several weeks. Dropping this into the daily chart, we attempted to break out on Friday, closed right at the highest end there with a big doji, and now we're kind of profit-taking mode right now starting the week. It'll be interesting to see how this chart develops over the next few days, but I am kind of anticipating this 20 period moving average still acting as support, and eventually still thinking that this is going to break to the upside up to about 40 or 42,000. So those are kind of my two rough targets on that right now. I will probably end up bar by barring that trade if it does confirm a breakout, but trying to stay out of the chop and mess between now and then. Going out to gold, actually firming up here. We have had a massive sell-off, regained, pushed all the way back up into this all-important 2,000 level, couldn't hold it, but this time we acted as support at all of our moving averages here. And if we toss this out to a weekly chart, this is starting to get interesting. If we get a close above, let's say 2022 or 2025. I don't see any reason this wouldn't run back up to 2085 for the high here, or even well beyond. You see, we don't really have much resistance past just a couple of wicks up here, just shy of 2100. So any trade that we close above that 2022, 2023 area should see us retest into that area. And now we are actually coming from a much higher support level here with this pivot, as opposed to the big run up here where we had a huge run moving into it and just didn't have gas left in the tank. And even this one, we pulled back and had a significant ramp up here. Same thing here, but now we're going from about half that distance from the previous pivot low up to the top was about 470. And this time we have only run about 150. So if that higher support level is any indication, it looks like buyers are stepping in earlier now on the pullbacks and potentially loading up on gold. So that is going to be an interesting area of the market to keep an eye on. And finally, last but not least, let's just poke over to TNX, our yield conversation. Drop this into a daily chart. We've been bearish here for quite a while, ever since these big volatility candles came in at the top end of the chart, broke our moving averages and support, and have been trailing down. Wouldn't surprise me. We're kind of fighting right at the 9-period moving average right now. Wouldn't surprise me to see that hold as resistance and work back down. Also wouldn't surprise me to see us come back up into around 46 and then roll over. I don't feel like we're going to see a massive spike in the 10-year Treasury index here again, unless something crazy happens economically. Right now, it looks like for the time being, we are trending down. So keeping an eye on that and playing that as necessary. And then finally, with the US dollar index UUP as well, we are showing a little bit of an oversold reading on our RSI, so we could see a little bit of chop sideways here, maybe coming up similar to TNX and retesting the 20-period moving average. But now that we have broken significantly below this consolidation at the top end of the chart, it does look like prices are going lower, and we will likely find ourselves back down to around 28.75 before too terribly long. So hope that is helpful, guys. As always, let me know if you have any questions in the comments and if I can be of help to you in any way.